Business Weekly is back and we're kicking off the month of December on a very high note. Hello and thanks for joining us on this fresh episode as we spotlight some of the biggest conversations that shape the world of business across sub-Saharan Africa this week. I'm David Alabi. Our highlight from West Africa this week, we'll take a look at Ghana unlocking $360 million under the IMF Extended Credit Facility arrangement as voters also decide who will become the country's next president this weekend. And from our East African desk, we unpack strategies shaping the region's trade landscape. Well, let's get right into the conversations for today. My colleague Karabo is on standby for regional updates from South Africa. Hello, Karabo.
Thank you, David. This week, we unpacked African corporate air travel trends. And for this conversation, my colleague Zanella Morrison spoke to Felipe Scalabrini, who is the president for Africa and Europe at VistaJet, about how the growth in private aviation sector is reshaping travel. Let's listen in for more.
The African market has been part of our growth story for the past 14 years. We've been present on the continent and we've seen incredible growth just for 2024. The first half of 2024, we've seen a growth of 14% year on year in flight hours flown globally. That's especially impressive in a market that's been trending down, decreasing at about 2% following a COVID boom. So getting exceptional growth again. And Africa is no different. We've seen 103% growth across Africa in flight hours and 30% growth in new program hours sold. So for us, the growth is coming from, obviously, it's in line with the free trade agreement that's been launched in 2022. So from 2022 and 2023, we decided to expand our service area to the African continent. So what this means for our clients is they can now fly point to point pretty much anywhere in the world, whether it's in Europe, in the Americas, Asia, Middle East. Now they can also fly point to point across the African continent.
But that's also a reflection of just how much high net worth individuals are operating within perhaps the big five wealth markets. Mm-hmm. Is there even more? I mean, what is the escalation of that growth? I mean, do you see it year on year that we are making more and more millionaires and those who need to then run these big businesses across these markets?
Mm-hmm. It's interesting. It's not, for us, we don't see it just as millionaires or billionaires. It's really, we are speaking with the most successful entrepreneurs, corporations, governments around the world. It's providing mobility solutions, connectivity across the world. And Africa, obviously, has a huge challenge of connectivity. If you have an entrepreneur that needs to go and develop a region in a safe, timely manner, sometimes the connections are just not available. And what VistaJet has done really well over the past 20 years is providing a different solution, a different business model to get access to these business tools. So with us, basically, our members can simply buy 50 hours, for example, on an annual basis. They don't need to buy the asset. They can simply use the infrastructure that we've put at their disposal globally. We have 240 aircraft worldwide, and that's what we're expanding in Africa now since 2022.
And that's very interesting because so what you're doing is you're a business solution necessarily and not necessarily focusing on private individuals, because that's how we often look at it. But if we're now having to look at this flight activity that you are taking advantage of, is it as a result of the growth in businesses or also an opportunity that's come through to the inability to flexibly get to where you need to get to in time? Mm-hmm. What is it that's spurning and enabling the growth of Vista is the question.
I would say it's a bit of both. It's definitely the lack of solutions, the lack of availability, but it's also the growth that is coming from the free trade agreement. We're seeing a lot of corporations around Africa needing to get from A to B, different locations, different points. We're also seeing a lot of foreign investments from some of our clients coming from all corners of the world coming to Africa. So we see really that growth coming from all over the corners of the world. What's really interesting for us, again, it's the availability of these solutions because if the ability to buy the hours that you need is very different than having to buy your own aircraft. So sometimes you wouldn't have other solutions available. So with us, our clients have a lot more a flexible solution and something that they can build on much more easily.
And in more news, moving markets in the Southern African region, CNBC Africa's Godfrey Mutizwa spoke to Luke Morowitz, who's the Alliance Trade Credit Intelligence Director, about the rising tensions between the US and China and how they risk making global supply chains more complex in 2025.
Trade tariffs are back on the agenda now, following Donald Trump's re-election. In our report that we've recently published, we have two scenarios which we've basically presented. So essentially it boils down to what we would consider a contained scenario or a full-blown scenario. The contained scenario would result in a 0.6% decline to global trade growth. Whereas a full-blown scenario would result in about a 2.4% decline in global trade growth. So this is obviously underpinned by various tariffs that the US would go ahead and impose on imports. I think the main loser in this scenario would obviously be China, because that's been the main focus for tariffs in the past when it comes to Donald Trump and his government. So essentially what we forecasted, there'd be a potential increase from the current 13% in a contained scenario of anything up to 25%. Whereas if we had that full-blown scenario play out, we could see anything from 50 to 60% increases in tariffs on what they would consider essential and non-essential goods from China.
Yeah.
This is obviously quite concerning, because there is then the potential for this to stoke further inflation. And I think, as most of your viewers would be well aware, inflation has been the enemy that everyone's been trying to combat for the last 12 to 18 months globally.
Yeah. What's the likelihood, Luke, that we will get the full-blown scenario that you have painted?
I think in all probability it's quite unlikely. So I think the US economy is doing quite well at this point in time. They've got very, very, very good growth. Inflation seems to be under control. The Federal Reserve is doing the right things in terms of managing the interest rate cycle. Not maybe going overboard and overheating things too much. On the off chance that we had that full-blown scenario play out, I think the US is obviously in a position to lose in the region of about 1.2% in terms of GDP growth. And we anticipate or forecast that would probably stoke inflation by about 0.6% upwards, obviously. So it's obviously we understand where Donald Trump might be coming from in terms of those policies, but I think there is obviously a lot for the US to lose if they do go ahead with the full-blown scenario.
Yeah, I've got a question that I will give you right at the end, but I wanted first of all to talk about the probability that China is not just going to sit and fold its hands, right? They are likely to retaliate, and if that were to be the case, what would be the collateral damage, especially as it relates to South Africa and Africa?
Absolutely. No, I think if you have a look at the economic growth of China, obviously the US from around about the early 1970s up to the early 2000s was the economic powerhouse, and China wasn't even really on the radar at that particular point in time. Obviously, as their markets have opened up and liberalized a little bit more to a degree, they've now essentially taken over from the US as the global powerhouse in terms of overall global growth or GDP trade. So in that respect, they don't necessarily have as big as a market in terms of domestic demand, but again, that is also growing quite rapidly as the middle class in China expands, and that economy becomes basically the leader globally. Does it escalate? Does China retaliate? Yes, I think that's fairly clear that that's not something they would not necessarily sit down and accept. There are a lot of countries, when I talk about the global south, a lot of countries that have essentially aligned themselves more economically with the likes of a China. South Africa would be one of those, as opposed to the US, which is a little bit more focused on the UK and a little bit more Eurocentric in terms of their allies and their trade relations. I think the global south as such is obviously a very large and very quickly growing and expanding market for them to be involved in. At the end of the day, I think the biggest fallout would most likely be with the US, and it doesn't necessarily impact China as much, because I think as a effect of their leapfrogging and basically becoming the global leader in terms of global trade, they have options. Whereas I think the US is maybe not as well positioned as they might have been 20 to 30 years ago.
And that's it from the Southern African region. It's back to you, David.
Thanks a lot for the updates there, Karabo. Now, up next, we cross over to East Africa for more content from Tabitha. Take it away.
Thank you, David. This week, the world marked World HIV/AIDS Day under the theme Follow the Right Path. With investments playing a key role in combating HIV/AIDS, the U.S. President's Emergency Plan for AIDS Relief, PEPFAR, has invested over $110 billion over 2 decades, saving 25 million lives and transforming healthcare systems in Africa. I spoke to Catherine Corner, the Vice President of Public Policy and Advocacy at the Elizabeth Glaser Pediatric AIDS Foundation, on rising concerns about declining global financial support and investments in shaping the continent's fight against HIV/AIDS.
The real challenge is, the AIDS response has been around for 30 years. And, initially the response really relied on international aid and development to sort of get boots on the ground and pills in the clinic. But over the time that we've been dealing with this epidemic, it's become clearer that a lot of stakeholders have different roles they have to play. There's different investments that need to be made. And countries and governments are evolving how they look at not just innovative finance, but as you said, sustainable finance for the HIV response.
And looking at return on investments in HIV programs, let us explore the economic and social benefits of programs like PEPFAR.
I was recently in Malawi and got to see firsthand all the changes that have happened in that country since I first visited in 2015. One thing that we've seen is that a lot of health clinics, they used to be very crowded. You had people waiting all day for medicines, and now people are able to, go for a short visit. They have community services better, which allows them to not have to travel, to not have to take days off of work. So I think what you've seen is that we feel this feeling of the healthcare system as being stronger, but the ripple effect of that is also quite dramatic. So, the economic outputs, we have a healthier, stronger workforce. And there's been studies that have shown that countries that have had PEPFAR investments have had increases in GDP over the past 20 years that would not have happened if PEPFAR wasn't there. I work for a children's organization, and so we really look at sort of how young people are thriving. And there's been research that's shown, particularly around primary school attendance, that the numbers of children staying in primary school since the beginning of PEPFAR has been enormously different. In fact, we've seen some research shows 45% more girls staying in primary school than before the PEPFAR program existed. So, it's sometimes hard to quantify how different the world would be if PEPFAR wasn't there and the U.S. and global response to HIV wasn't there. But I think there's no question the impact it's having economically and socially in the countries where we work.
And the role of partnerships cannot be emphasized further. So what can we say the public-private partnerships have to play here, looking at the blended finance and also other innovative models in terms of helping secure sustainable funding for HIV prevention and even treatment?
The partnerships are really diverse and really necessary. So as I said, the beginning of the epidemic, there really was more of an aid reliance. But as this has grown, you see a lot more private sector, a lot more different partnerships emerging. So the ones I think people are most familiar around are going to be around the drugs and diagnostics that are necessary in the field. So, you can imagine you have these originator companies that make these fantastic new drugs, but, they're not too sure how to get them in country or how to sell them. And so you have these partnerships now between governments and private sector to really shape the market, to understand, okay, well, this is where these drugs are needed. Let's find a way to get them into these countries faster, get access to them faster. And by doing so, it also helps reduce the price faster. When companies know how much of their medicines are being bought, it's really easier for them to produce them at a scale that lowers the cost rapidly.
The East African community has been deemed the most integrated trading bloc on the continent. To take stock of the hits and misses for the trading bloc and identify the most pressing areas for deepening trade in the region, CNBC Africa's Abi Agena spoke to Annette Semwemba Mutawe, the Deputy Secretary General of Customs, Trade and Monetary Affairs at the EAC, for more.
We celebrated our 25th anniversary, and it was a very joyful occasion. We celebrated many milestones, but I'll perhaps point to a key one, which is finalization of protocols. The Customs Union Protocol was concluded and has been under implementation. It has delivered very, very many positive changes on from a trade perspective, customs connectivity, all these interventions that we're discussing here on one-stop border posts, all of those are a result of that legal framework that is in place. We also concluded a protocol on the common market, which allows for free movement of goods, but also free movement of services. We have mutual recognition in a number of areas. We have free movement of labor, we have right of residence, right of establishment. All of these are part of the common market protocol. On the monetary union, we've also made progress. Again, a protocol was concluded in this respect. A roadmap has been drawn up. It has a number of areas where partner states need to converge. It has a timeline to 2031, and we're seeing good progress towards that convergence. And then, of course, the political confederation consultations have taken place in some of the partner states. They will take place in the others, so that together as a region, we can deliver on those 4 pillars. Already, I think for me, that's huge success, bringing together partners. The community has expanded. The original members were 3. There's now 8 partner states. It shows interest in this integration process. It demonstrates an expanded market, a bigger population, and you will see or read in many of the publications by other organizations such as the FDB that the EAC is the most integrated regional economic community. So we are very, very proud of all of these achievements. Of course, challenges remain. Challenges around non-tariff barriers. These are issues that we talk about all the time, and the need for their elimination. We have systems and processes in place for their elimination, but they crop up, they happen, and they disrupt trade. That's a huge challenge. We have issues around peace and security in some of the countries, and of course there are ESC interventions to support countries through these peace initiatives. Issues around climate change, and we are starting as a region to implement policies to mitigate and adapt to climate change related matters. And even at the last COP, we were there as a region to engage and to also look for solutions to deal with climate-related issues. We have issues around financial sustainability. It's a larger community. It's a big program. If you've looked at the treaty, it provides for areas of cooperation from health, from education, to sports and culture. That agenda is broad and it needs lots of resources.
Those were key developments in the East. Back to you, David.
Thanks, Tabitha. We now bring our regional focus back to West Africa. Ghana has unlocked a $360 million disbursement from the International Monetary Fund following the 3rd review of its extended credit facility arrangement. Now, this brings the total disbursement received to $1.92 billion so far since agreeing to a $3 billion program in May last year. Benjamin Boachi, Chief Economist, Second Stacks, shares insights into the impact of the facility and the country's journey to economic stability.
We are very pleased with how this 3rd review has gone. It was a much more upbeat tone from the IMF once they had completed the review, even more upbeat than the 2nd review. And that was because pretty much all of the quantitative targets had been met this go around, and all the other indicators seem to be moving quite decidedly in the right direction. So, there's a $360 million disbursement that's just been done, and that is also going to help out on the currency side, which has probably been the most precarious part of the picture. But we've recently seen quite a bit of improvement on that side as well. So all around, it was a very, very strong view of the program.
Now, Benjamin, while we continue to paint the sort of picture we'll see Ghana achieve near term, we also have to look at the elections. The focus is on that. Now, from the IMF, it says, prior to the elections and post the election, we have to see steadfast implementation. But looking at case scenarios now, we are seeing from different polls right now how the pendulum might likely swing. In the case scenario where an NDC wins, do you think the country will be able to sustain the sort of reform momentum? And what will be the likely upside risks?
Well, I can't really say what would happen in the case of an NDC win. I know that in the case of continuation, you would see continuation, right? This government has been deeply involved in executing the prescribed reforms that the IMF has put out. So, I mean, if continuity is what folks are looking for, then the MPP would probably be the way to go. It's extremely difficult to say what would happen in the case of change of government.
Okay, well, talking about whether or not we are going to see much change and how things might pan out going forward, but let's talk about optimism around the cedi rebounding against the greenback and other global currencies. We've heard from the Bank of Ghana's governor who says that, well, we're seeing the cedi rebound on the back of the easing election-related uncertainties and also the FX buffers. For you, how strong do you think the cedi will get? And also looking at the inflation target, we're seeing a shift of the timeline here from the third quarter now to the fourth quarter of next year, getting that 6 to 10% range. Do you think this is feasible near term?
I was happy that they paused on the cutting cycle because I think inflation expectations have gotten a bit unanchored in the readings, in the two prior readings. You saw inflation kind of tick up, and that was because probably in the view of a lot of economists, the last two cuts were a bit premature, right? Inflation was still hovering around 20%, which was well outside of the target range. With regards to the projections by the BOG, I think they're a little lofty. They're riding high right now, and they're looking at making strong and bold pronouncements, doubling down on the success that they've seen. But I think the more likely trajectory is a little more gradual. So at the end of perhaps the next year, I think we're more likely to see something close to single digits, if not, just managing to achieve single-digit inflation, which would be a good outcome. We've been dealing with a very, very difficult inflation fight for the past couple of years, and the Bank of Ghana has done the work to get it under control, but there's still a long way to go, and I think we need to recognize that.
We now should focus to maritime security. The Secretary General at the International Maritime Organization, Arsenio Dominguez, says the Red Sea crisis is greatly impacting international shipping as it puts a strain on trade. In a chat with CNBC Africa, he notes alternative routes and multimodal shipping are at the highest priority of the IMO's engagements with stakeholders.
There were two main events that I attended when I was in Tanzania last week. The first one was the meeting of the Djibouti Code of Conduct, which of course is an instrument that enhances the maritime domain and capability to protect shipping and in particular trade. And this is in relation to enhancement of the security aspects in the region. Next, and after that meeting, there was the African Association's Maritime Assembly that meets every year in order to discuss the action plan of the main priorities that the continent has related to shipping. And that goes from safety, security, the environment, and the human element. And of course, the role that the International Maritime Organization plays in supporting the maritime sector in the region.
Now, I'd like you to speak to the maritime safety challenges in Africa, particularly in Eastern and Southern Africa. We know that there's still issues around piracy and also the impact of the Red Sea crisis. Help us understand the scale, first of all, and also how these issues are being addressed.
Currently, the Red Sea crisis is the one that is greatly impacting international shipping. And I continue to condemn these attacks, particularly for the negative effect that has on innocent seafarers. When we have seen how this is not only affecting the region, but is globally by apart from the effects on seafarers, also is the effect on international trade and commerce, as by rerouting the ships away from the Red Sea, not only increases the time of sailing around the world, but also the emissions and the negative effects on the human health and the seafarers. It also has a strain in the actions that the countries, in particular Western Africa, need to take in order to provide the supply, the required supplies and bunkering facilities for the ships to operate in a safe manner. What we have been doing, sorry?
Go ahead, please, finish your thoughts.
What we have been doing is engaging with all the countries in the region in order to find solutions towards the de-escalation and respect for the freedom of navigation, as well as any additional support that countries may require to enhance their security capabilities.
Now, while you were in Tanzania at that conference, obviously there were, these key issues were discussed, but talk to us about what the outcomes were, what solutions were preferred, what the recommendations are from all stakeholders that you had conversations with at that conference, and how soon these recommendations or solutions can be deployed.
When it comes to security, the main focus was on the Djibouti Code of Conduct meeting, where we also have representatives from the different naval assets from countries that are providing assistance, for example, EU ASPIDES. And they are sharing the information that is required for the shipping industry to communicate with them and see how the assistance can be provided. At the same time, the countries are working into an action plan and the necessary support, both technical and capacity building, that is required to enhance the preparedness to face these kind of attacks. Of course, we have to recognize that the geopolitical situations and the root causes are beyond shipping, but we need to provide the operational technical assistance for ships to continue to operate in a safe manner, and also carry out any assessment in relation to security to decide what is the best route or any alternatives to take. When it comes to the meetings with the maritime associations, it was focused, apart from the safety aspects and security that we also discussed on the Djibouti Code of Conduct, the next set of measures that the organization is introducing, both covering environment with our goal of decarbonizing the sector by around 2050, as well as the opportunities that exist for Africa.
And on that note, it's a wrap on this week's show. Thanks, Karabo and Thabita, for the regional update. And many thanks for watching Africa Business Weekly. Do join us again same time next week for more interesting conversations. I'm David Alabi. Do enjoy the rest of your weekend. Bye for now.